introduce yourself.
Thanks, MK. Hi, I'm Ray Whiteman, co-founder and managing partner of Stellix Capital. Stellix Capital, as some of you may know, is a middle market private equity firm based in New York with offices in London, Detroit, and Pittsburgh. We have about 35 people at the firm at this point. We started this business 7 years ago. My partner and I came out of Carlisle, where we had run its distressed and special sits operation for a decade. And I had spent an additional 7 years at Carlisle. So I was there for 17 years before leaving to start Stellix, which is really kind of middle, as I said, middle market, able to invest in mainly industrial and special sits, as well as we've added a number of people that have kind of food experience, aerospace and defense experience, and we could also do things on a secondary basis where we can do debt for control.
And I know you also have been involved in Robert L. Johnson's private equity, RLJ private equity.
Yes, I was on the investment committee for a number of years. I was at Carlisle. It was kind of co-branded with Carlisle, so I had the experience of sitting on that investment committee for a number of years.
So I think it'd be interesting to talk with you, as we go through the panel, about developing culture in established firms as well as in new firms. Liddy, how about you? Tell us a little bit about yourself and about Mizzen.
Thanks, MK. I'm the managing partner of Mizzen Capital, which is a recently formed SBIC fund. We're a lower middle market private credit fund and actively investing. We founded the firm, my partner and I, Marilyn Adler, from two separate platforms. And we came together having known each other for 20 years when both of our prior funds were nearing the end of their investing periods. So this was a natural outgrowth for us. We both always wanted to build a fund that we felt would be inclusive and would really address some of the opportunities we saw in the market for investing in companies that were perhaps not mainstream as much. We are investing simply with a lens of optimizing returns for our investors. But what we're finding is there are a lot of less trafficked areas in the market. A lot of women-owned firms come to us, minority-owned firms come to us, and we've been really successful so far, and we're looking forward to it, to continuing to grow. My background started at Morgan Stanley. It was great working at Morgan Stanley, but I will say that was an example for me of a less inclusive firm. And I learned some of the things that I would change if I ever had the opportunity to build my own. I then ran two companies, was very proud of those, and they both sold to public companies. Then I did angel investing, and then I worked for 10 years prior to this in private credit, direct lending investing. So this is a natural outgrowth for me of all those experiences combined, which were all great in their own ways. But this is the most exciting thing I've ever done because of the ability to put a totally inclusive culture in place and get that enthusiasm from my colleagues.
Great. Well, thank you, Liddy. We're really happy to have you on the panel.
Thanks,
and Steve Brady from our sponsor, Witham. Tell us about yourself and a little bit about Witham.
Yeah, thanks, MK. Good morning, everyone. Steve Brady, partner and market leader of transaction advisory at Witham. Been with the firm a little over a year now, was brought on to lead the transaction advisory practice nationally and build that group. So we're certainly work a lot with obviously private equity firms as well as strategics and others in the M&A space, broad spectrum of transaction advisory work we do. Witham is a national CPA and advisory firm, a lot of offices up and down the East Coast and 3 out in California, and there's a small group of us in the Midwest. So certainly excited about this event. As you know, one of the parallels is I've built the practice and we've quadrupled our size in the last year. This topic that we're talking about is very important to us. It's very important to Witham. The firm's, culturally done a really good job of weaving this into the fabric of what we do, and we're excited to sponsor the event and help participate in this. My background, real quick, 20 years doing this. Started in 2004 with Grant Thornton as a partner to start their transaction advisory practice in the Midwest. 6 years before that, I spent as a CFO, had operational hands-on experience, which was a lot of fun and certainly very educational, and started my career in audit, was an audit partner with a global firm. So yeah, we're real excited to sponsor it today.
Great. Well, thank you so much, Steve. And Steve is joining us from Chicago. I'm in New York, raised in New York, and Lydia, you're in New York as well.
That's right.
Yeah. Okay. Just always like to position, know where everybody's sitting. Well, let's talk a little bit about the moment in time that we're in. I've been covering private equity now as a journalist for 15 years. I don't think I've ever seen a moment in time before when the industry seemed to be talking about and focusing on and thinking about diversity, equity, and inclusion. I think people, firms and individuals are at different stages of that process in terms of thinking about it. But as a collective group, this DEI really seems to be top of mind. Ray, what do you think about this moment in time?
Yeah, look, I think from my perspective, obviously, there has been that social awakening. And now you have a number of LPs kind of raising these sorts of questions. I think some of the challenges, as I look at it, is the fact that you've had an industry that's now, say, 30 years old, that's built its culture very differently. And now all of a sudden, folks have to kind of take a step back and say, maybe we need to change some things. And the numbers kind of speak for themselves. We all have seen different statistics of what's going on in the asset management business and in private equity. And I think it's hard. It's hard when you've built a culture over 25 years and all of a sudden you're being called out on it. And it's not the easiest thing. So I think it's going to take some time. It's an ecosystem that's kind of fed upon itself. Because if you're going to the same schools and if you're recruiting the same people, you're going to get the same things. And these buildings and institutions have been built kind of the same way in a lot, and now it's being kind of called out. So I think it's really interesting to see. And from my perspective, how do you change that culture? It's not going to be, you can't pivot in 1 minute after 20 to 30 years of a firm's existence. That's why it's easy for us. We've been around now 7 years, but we came in intentionally looking to kind of create a very diverse environment from day one. And it's going to be, I think it's going to be hard. And again, it's a moment. We're going to see how long this moment continues. My guess is, as much like cycles happen, there will be, the inevitable reversion to the mean, where folks are not being kind of forced to take a look at their cultures and diversity.
I mean, for me, that makes this moment in time really essential. This is the moment to capture that enthusiasm and build the infrastructure. Lydia, what are your thoughts about this moment in time, 2021, in terms of DEI?
Well, I definitely feel what Ray is feeling, which is that this could pass and not make a bit of difference if people don't integrate it. And I think one of the ways that I'm seeing LPs in particular, especially the big public pension funds leading the way, is looking for results out of this. And there's nothing that speaks to continuity as much as results. And we are seeing more and more analysis showing the value of diversity. Diversity is another form of diversification. You have too much risk if your portfolio is not diversified and if your staff isn't diversified. So my hope, and maybe I am an eternal optimist, I admit it, but I think that the results will drive the continuity of this moment forward. Hoping.
I mean, that's one area that I think we have seen progress. I think that people have, there's been so much evidence that diverse teams produce better results. It's overwhelming evidence. So right. I think people have stopped questioning they've stopped asking the question about, well, prove to me that it matters. I think I think most people in the private equity industry today understand that diversity produces better results. But, what do you do with that information and how do you move forward with it?
Doesn't make it easy. It doesn't make it easy to change the way you've been doing it. Yeah.
Right.
Yeah, Lydia, as you look at, as you started your firm very recently, as a firm founder and leader, how have you created that culture within your firm, and what are the lessons others, have from what you've been venturing along on this new venture of yours?
Well, Steve, it is an absolute rush to be able to create a culture, and the reality is you can't really do that except by creating a team of people that work well together and value things that are in common. And what we value as a team are respect and listening. Listening is huge, and I think we've all heard about how hard it is sometimes for quieter people to be heard, and we're absolutely adamant about that. Frankly, I think these Zoom calls have been helpful, just an outgrowth of something else, but it's resulted in our being able to work with LPs at a level that's more direct and very helpful. A few simple things we've done, though, to recognize that we have multiple levels of diversity. We have certainly gender diversity that, we're women-owned. We're the second women-owned SBIC fund out of 300 SBIC funds, which is kind of crazy when you think that the lower middle market is 40% women and minority-owned businesses. But, we're the second. That's a good step. But we also think about cultural diversity and ethnic diversity and age diversity and educational diversity. And we're looking at all of those things when we're hiring. And one of the things we do, practically speaking, to recognize that is we've eliminated federal vacations. So there are 10 federal vacations recognized in the US. We don't recognize them. We let every person pick their 10 federal vacations. So, we have a Chinese colleague who really doesn't care about Christmas, but really wants Chinese New Year. And we have an Indian colleague who wants Diwali. And that simple step created a recognition in a tangible way that we respect cultural diversity. That kind of thing is very simple, but it's very impactful.
Oh, absolutely. That's a great example. And, Ray, you've had 7 years or so, working on building the culture of Stellex. What have you as founder done since the beginning, and how is that changing to build that culture?
Look, I think, coming from a large institution, what we tried to do was kind of take some of the best practices and bring it in, into a place like Stellex. I think we've done a really good job of making it a very inclusive firm. Some of our senior investment professionals are women. We have junior investment professionals that are minority and women. And it's really and we're trying to also foster the ability for them to grow. So it's just not getting them in, it's really focusing in on the retention side of it and giving them all that they need to make them feel comfortable that this is a place that they can build a longer term career, as opposed to, I don't see anyone upstairs that looks like me or cares about me, so why what's the likelihood of me being able to progress in the firm? So we've really kind of instituted training as well as mentoring programs, so that folks, even in a small firm, so that folks can feel like they are included and a part of the decision making processes. And we constantly reinforce asking everyone their opinion, because you're right, Liddy, there are people that are naturally quieter. So you have to kind of sometimes bring it out of them. And it's important to do that, so that, again, gives them ownership in the business, makes them feel like they are part of the solution.
Yeah, that's great. Go ahead, ma'am. Okay.
Ray, what about any kind of formal training, unconscious bias, any training that you do at the firm around these issues?
And now that we have an HR person that started with us, that is on the list of to-dos, to make sure that we are really cognizant of, look, we all have our biases, and being able to look at them and address them is part of that. So there will be training on that as well. on a go-forward basis.
And Liddy, I know you've been involved in fundraising, and I think you've had the experience. I've had the experience. I'm sure Ray has too, of being the only one in the room. Talk a little bit about that for a new firm, and to what extent are these issues playing out in fundraising and other activities?
When we launched, so many people said, I could raise you money in a blink of an eye. Gosh, you've got all the emerging manager programs working for you. And I thought, great, but it has not worked out that way, because the reason those programs exist is because there is still a challenge if you are fundraising and you're a little different, and we are different. So just, gender, culturally, we've got those challenges. And so we have found that it is statistically true that the people who are investing in us tend to be either women or people of color. And we have found more support in those areas. I think that will change over time as they see our tremendous IRRs, and then we're doing really well right now. So I think we're proving the point, but it's, there's definitely a challenge when you walk into a room and nobody looks like you. And that's one of the best things about that is, though, that goes away quickly when you start talking. One of the things we're doing, not only on the fundraising side, but also on the portfolio side, is using that difference to be able to really analyze where the weaknesses are of our team and also of the companies we're investing in. And if we find that they're not diverse, or in a case recently, we found a company was calling itself women owned, but it was actually just pink washed. And there were 3 prior credit funds that had gone in there, and none of them had really called them out on it. And when we called management out on it, they were shocked. They said, nobody cares about this. And so I think LPs and companies are beginning to realize that when you have a diverse investor, you're going to have to be real about caring about diversity and respecting what those programs are in place for. So I think the emerging manager programs have been great for us. We're hoping to move out of that field and just work on our own track record very soon. But for right now, that's been absolutely crucial.
Yeah, go ahead.
I think, one of the challenges you're both touching on that turn the discussion into recruiting. I mean, to build these diverse teams, I think one of the hardest things certainly is attracting that talent. And what are some of the challenges, even given the firms that you have, in finding the talent, recruiting the talent, and being able to build that diverse team?
Ray, I'm hoping you can talk a little bit about that piece of it, the recruiting piece.
Yeah, look, it is a challenge. Obviously, especially over the last couple of years, where obviously the focus has shifted to women and minority candidates and getting them into these firms. And when you're competing with the bulge firms, they have obviously a lot more resources in order to go after these students. So where we've taken it at this point is we've started our own internal analyst program, where we're trying to find students from colleges, HBCUs, bringing them in for the summer and then giving them a full-time analyst position, and we're putting them through the grinder during that summer. They're getting the same sort of training that they would get at any other firm in order to prepare them so that when they come in as analysts. So we're going younger and younger, trying to find folks. I'm on the board of Tuskegee, and I'm setting up a program with them to really try to get more Tuskegee students onto the street. I think the hardest thing is when you look at the aperture, just because of the consolidation at the top. Look, most of us recruit from the same places, from the same banks, from the same investment banks and commercial banks. And I think it's very difficult as that funnel is getting narrower and narrower, and just the sheer numbers are not going in our way. So it forces you to become more creative in trying to find folks. And obviously, finding diverse candidates is kind of the flavor of the day, and you're competing against a number of larger firms that have much more resources to facilitate that. So it forces us to do different things, setting up, talking to the city colleges in New York, where a lot of folks don't get recruited from, and having discussions with them about, okay, how can we change, the paradigm here?
Well, and you talked earlier about, 25, 30 years of building a culture for the whole industry and the importance of changing that. And some of it, I think, is also a bit of a public relations issue for the private equity industry to get the word out that it is this, exciting, rewarding industry. Talk a little bit, Ray, about some of the organizations that maybe you've partnered with over the years. You mentioned some HCBUs. HBCUs.
Yeah, definitely some of the HBCUs, organizations like NAIC and TWIGO and SEO, and really just putting myself out there and the firm out there. That's why I decided to even start a place like Stellix, because I had a very successful career at Carlyle, but decided that now was this time. What was going to be my next chapter in life?
Yeah.
And it was really to get more inclusion into the industry. And the easiest way for me to do that was to start something so that folks can, the next generation can say, hey, this is possible. If I do these things, this is possible. So I'm constantly on the phone mentoring. I'll take a call from any student, which at times creates a little bit of a problem. Because you're constantly, giving advice and helping them kind of develop a career path. So those are some of the things that we've really focused in on with all the different organizations, even the Asian ones, and just to create a more of a sense of inclusion.
Yeah, and Lydia, I know you've worked with many women's groups. Talk about some of those too, please.
Well, women and minority groups, we also work with TWIGO. I think they're great. And Private Equity Women's Investor Network has a whole effort around building interest from younger women in the private equity world. But I also think that one of the traditional patterns that our industry falls into is this high quality college, analyst, associate, boom, 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 every step of the way. And we've made it a point to be more flexible about people's career paths, because we recognize that it is not a lockstep that is available to everyone. And so some of the best people we're working with right now have had very non-traditional careers, myself included, and for various reasons, mostly family reasons in my case, but other reasons. And we respect that life experience and are bringing people in. The other thing that we found a little shocking is that people thought, some candidates felt that we would only hire women and minorities, and we've actually hired several white men, young men in our case. We want a diversified group. That means everybody. It doesn't just mean that we're only targeting, and having seen so many quota situations in my life where I was the token, I really don't want to go there. So we are truly looking for personality types, experience levels, really multifaceted ways for people to be diverse and to bring diverse experiences and opinions to the table. And that means you go to places that aren't expected. So a lot of people we're working with right now are people who've dropped out of the workforce and are coming back in and challenged to do so.
Yeah. Steve, I'm going to let you get the next question in, but I also just want to remind the audience that if you have any questions, feel free to put them in the chat area, and we'll ask them of the panelists. But Steve, go ahead with a question for Lydia and for Ray.
Yeah, thanks, MK. Well, I think you both touched on this. We have this moment of time, and you both expressed concern over this just being a moment in time, that we don't drive into the future. So, I mean, what would be, Ray, the number one action you think, or maybe it's two or three, but I mean, how do we really affect this moment in time into real change and make it sustainable and really create the culture across private equity that we're talking about?
Look, I think it goes back to, I'm mainly focused on industrial businesses. And one thing we always say, it's not the product, it's the process. You have to have processes in place in order to get it right. It just can't be a initial reaction and throwing a LinkedIn post that Black Lives Matter, and that's going to be the extent of it. It has to be a very thought out, well articulated internal process, and you're going to have follow through on the processes. You're going to have to make people accountable. It's almost like, we have these Gantt charts. You got to have who's doing what, when, and how, and names are attached. Right. And therefore it is really, people are held accountable for where the firm is going, as opposed to, we put up the BLM on different social media, and therefore we've checked that box. People know that we care. So it comes back to processes and really institutionalizing those processes as the best way to do it. It's not. It has to be intentional, and it has to have processes behind it, and people have to be held accountable.
Caroline Young is asking a question, which I'd love to hear you talk about too, Ray, which has to do with portfolio companies. To what extent are you working with them on their diversity, equity, and inclusion strategies?
Yeah, which is really interesting when I look at the base of our companies. As I said, we're in the industrial space, so we're in the Rust Belt, and in a lot of small towns. And these are businesses that are generally kind of 200 million in revenues and less, and they make things. These are dirty fingernail businesses, and a lot of these are family-owned businesses. So you could well imagine that in these small towns, there isn't going to be a lot of diversity. And what we can only fix what we have an opportunity to fix. I can't change the entire management team because they're all white male. And when I look through the whole organization, other than maybe a support function, it's a female, maybe on the HR side or something like that. What I can do is change boards and really bring diversity to the boards, where we're really forcing the issue of having at least one minority and one female sitting on that board. And when we go out for searches, if there are management changes we need to make in that C-suite in particular, we're insisting that we have female and minority candidates to consider. Now again, some of these towns are in the middle of nowhere, so you can well imagine it's tough to recruit people into those places. But we're doing everything we can to figure out ways to enhance the diversity, even at our portcos. And the least we can do is control what's going on at the board level.
Yeah, that's a good point. We only have a couple more minutes left, and I'd love to ask Liddy and Ray briefly, just to give if you have advice for other firms and other private equity individuals who may not have thought as much as you both have about these issues. What's your bottom line advice about how to make the private equity industry in general and their firms in particular more inclusive? Lydia, let's go with you.
Yeah. Well, I think to Ray's point, this has to be intentional. It has to be at every level. So not just recruiting at the bottom level, but every level of an organization will benefit from more diverse opinions. And those opinions can come from your existing team, but you can also build out the team at various levels, not just starting at the analyst and building up from the bottom. And also thinking about your portfolios and how much diversity is there, what's possible, what can be built into that, and whether that will actually help. Because fundamentally, this is all about results. And that's why we're doing this. It's not just results for the individuals, it's results for the investors. And I think keeping an eye on that ball and understanding the difference in your meetings when everyone's opinion is solicited and listened to will be shocking to some of these organizations. And so I think that's really, a simple first step, thinking about cultural diversity on many levels, not just gender and race, which are the top two that come to mind, but thinking about it on many levels, I think is actually crucial.
Okay, thank you. And Ray, you get the last word. Quick bottom line advice.
It's not going to be easy. And as Lita said, look, it has to be intentional. You need people that are going to be accountable at all of these firms when things don't necessarily change. Look, this has been an evolutionary process. It's taken 25 years, 30 years of private equity to get to where it is, to all of a sudden say, oh, we didn't notice that we look the way we do. Now, I think we're at that point where we're like, okay, so now how do we change it? We can't wait another 25 years. We need to really implement some drastic measures to hold more people accountable to making these, some of these changes.